Hey, what's up, guys? Welcome back to another video. Hope you guys had a great week of trading. Hope you guys are still intact. Hope you guys follow your plan. Hope everything was great. And, like always, you enjoy any of the videos I do. Any thumbs up or a like, whatever it is, whatever you guys feel is right. Make sure to drop it. Any comments on any future videos you guys would like me to do, or any specific analysis you would like me to do, go ahead and drop it in the comments, that I'll happily do it. But obviously, let's get straight into it. Well, yeah, this week was crazy, and just by looking at the chart, you could see the insanity that we had. Man. Week started off, I believe it was the 31st. So obviously from here was, if we were to give it a time level, this is the start of the week. So pretty crazy to say the least, right? And so one thing I want you is to know, this is a clean chart, so there's no levels on here. But obviously, last week we were looking at that 55.50, which was not only the 10% correction level, but it was also the lows down here. And so ideally, buyers wanted to hold that level, and we did for the most part on Monday, Tuesday. However, what followed was insane aftermath, and market actually since Thursday and Friday, and you can even see the large volume down here. Yeah, just down, I think, 10% in the last 2 days. Really insane. And, you know, volatility is through the roof. If you've been day trading, you could just know that, these conditions have not been easy. But again, as traders, the biggest thing is to adapt. Be able to trade in any type of conditions, as long as your levels align, as long as you follow your plan, as long as you follow everything. But, you know, man, was it crazy? Was it crazy? So, especially during these conditions, it's important to not have bias and not head into the market with the idea of, okay, you know, we this is a potential bottom. I see a lot of people on Twitter, I see a lot of people online saying buy this bottom. On the start of the week right here, a lot of people on Twitter were saying, oh, this is a bottom, we have to start buying. Start, this is generational wealth. And I agree with them, right? This sell off is potentially generational wealth for a lot of people that weren't able to, um, profit from the COVID lows, right? From the COVID lows, I believe it was right around here, or even from the 2022s, around that area where we had that kind of large sell-off. Um, some people weren't able to profit from that, but I do agree that these type of conditions, people make money as the market sells off, right? And so I agree. However, everything comes with time. Everything comes with time, and that's the hardest thing about the market, timing. And nobody in this market or in this generation, no one ever is going to be perfect when it comes to timing. No one, no one, no one. And so take everything you read online with a grain of salt, including this video. I'm no furu, I'm no millionaire, you know, but I'm a guy trying to strive to be successful when it comes to trading. So, you know, take everything with a grain of salt. And I just saw a lot of people start the week saying buy this dip, you're stupid to not buy this dip, and look what happens, right? We had news on tariffs, we had Trump speak more about tariffs. Market sentiment was pretty negative about it, right? Whatever political stance you stand on it, the market is always going to be the leading indicator when it comes to economic uncertainty and economic conditions, right? And one thing I actually, will show you guys, and is going to be right here. This chart, I think, gives you a pretty good analysis on what the type of conditions we see. And so obviously you could just tell from just looking at this, it gives you two, right? It gives you the economy and the market. And one thing you like to see is right here during a market bottom, right? Or during even a bear market, as we possibly are, the 20% correction level, which is something we're going to talk about in this video, is something to keep in note of when it comes to technically considering a bear market. But you could just tell that the market, being the red chart, is always leading before whatever type of economic conditions we're in. So if we're at a market bottom, it isn't until a little bit later that we're finally in that full recession for the economy, right? And it isn't until we're in that bull market, now that we're starting to be in that full recession, that later on we start to see that recovery. So again, market sentiment is always going to be the leading economic indicator, right? You can read a bunch of news, you can read a bunch of financials, whatever it is, right? And yes, it could be right. However, when it comes to market sentiment, it is always going to be the biggest thing to keep on the lookout for. So if the market sentiment right now is very, very bearish, why am I going to be predicting a bottom? Right? Why the hell am I going to be predicting a bottom? This looks amazing to buy long term, but why would I be predicting a bottom, right? And as short term traders, that's the last thing we want to do, predicting bottoms. And so, similar to last week, obviously don't want to get too much into last week, or as I talked about in the previous video, I don't really want to start debriefing every single trade I took. So one thing I'm going to start doing is doing trade of the week, right? Trade of the week, and it's going to be, in my opinion, obviously the trade that I felt was the most rewarding, most patient, with a lot of factors in following your rules, whatever it is, throughout the week, right? And so full transparency, uh, week was, I ended up green. P&L ratio of 2 to 1, almost 2 to 1, so 1.8 to 1. And so obviously that's my risk to reward. And so it was a pretty interesting week for me. Started off really strong on Monday, Tuesday, and then Thursday had red days, and then Friday ended off pretty well. But trade of the week for me is going to be that Friday trade. And just, let's get straight into it, right? And so for Friday, my biggest thing looking at Friday was yesterday market showed another gap down, right? We were gapping down heavy. This was, let me see if I could show you it visually right here. If I was to show futures, show extended hours, right here. This is an important thing to know. We were gapping down. We were gapping down heavy. And so one thing to note, right, is that, when there's a gap down, if sellers are truly strong, they want to hold it. They truly want to hold that gap down and keep it unfilled, and that's what traders did, right? That's what exactly they did, and they weren't able to, and buyers weren't able to fill it, right? And so heading into that, right, you can see that gap, that visual gap. We actually had 2 days of gapping down, right? This is when Trump spoke after market close, and then this is the following day, market open, right? And so, we had that gap down. And so obviously my thing is to always follow the trend, right? Always follow the trend. We seem to be obviously really, really strong to selling off to the downside. So there's no reason why I'm gonna predict the bottom, right? There's no reason why I'm gonna try to get long unless there's something that really shows. And so obviously we had another gap down. This really shows the sentiment in the market right now and how heavy it is. Currently with this gap down, there is not really significant levels from the previous profile, right? Right here, these are the levels I had from the previous profile, but despite that, we were already gapping down almost what? That is almost 120 points, 130 points. And so, right, there was no significant level to watch. So one thing I was looking for was the pre-market, right? What was it giving us? And so there was no significant levels that I'm watching, so it'll be important to monitor the day to see the buildup of the profile to see if there are any plans. One thing I will say is the market is emotional. You can see that from the market depth, how thin the tape is and how sporadic the movements are. So sizing down with wide stops are the best during this, and I have learned this the hard way. Right, and so obviously Friday being the trade of the week for me, but the biggest thing I would also say is that right here on Thursday, right, I'm not gonna go too much into it, but on Thursday, one of the mistakes I even wrote down is not sizing down, right? A lot of these conditions, obviously, I usually play 3-point stop losses, right? That's really ideal for when it's, normal volatility. But during normal high volatility, from what we saw this week, those 3 points are going to be worthless. They're not going to be anything. 3 points is going to get you stopped out instantly. So what you want to do is, you want to make those wider stops. And that's something I didn't do, right? I made those stops wider, but unfortunately, I got stopped out. And one perfect example was actually here. I took 2 trades, 2 L's, and the second one right here, this is when I actually got in on a pullback once we pulled back into this area. But despite that, look, I got in filled around what? I even give you it from right here. I got filled in around 55.05, and I got stopped out for 4 points. 4 points. But like I said, 3-4 points is not going to be ideal for these conditions. 6 points is going to be the best. in my opinion. And so I actually got stopped out to the tick, and it worked exactly in my favor, and it was really frustrating. So I learned that the hard way, right? So heading into Friday, I already had the idea of sizing down. Usually for me, for full transparency, I trade around 5 contracts, but heading into this day, I was looking to trade half that position, so 3 contracts, but doubling the risk. So instead of risking 3 points, I'm risking 6 points now. And instead of that, also aligns with your targets. Instead of targeting 10 points, you should be targeting 20, because during these conditions, 20 points is something that's very viable, right? And so heading into Friday, that's something I was looking for, sizing down and keeping those longer profits, right, or keeping those targets longer. So buyers, I said zero chance of buyers unless we get above 22 and hold. And so one thing I was looking for is obviously due to the pre-market, right? We didn't really have much news, but two levels that came important to me is or much levels, but two levels that came important to me was these 22s, is because one, we saw this consolidation. You could even see it right here in the pre-market. We saw this consolidation here. We broke down. So for me, we left that low volume node and then we consolidated after. So one thing I was looking for is, again, heading into this market, I was seeing that we're going to open within this range. So when we are within the range, I want to play two-sided activity strategies. So that means for me, failed breakouts. So one thing I was looking for was, okay, if we're in this range, one thing I want to see is if we fail to break above these 22 into that low volume area, I'd be looking to take the market short, right? And the buyer scenario is if we're able to get above, I want to see it get above, pull back into it, and hold it, right? That's my scenario that I was watching. But for me, for the bears, since we are in that kind of balance range, into that two-sided activity range, one thing I was looking for is for a break above into this low volume node that fails, right? And actually, I did see it live, right? I did witness that live. It was around 8:30. Like around right here, 9:05. I witnessed that, and I was actually gonna take the trade short, but it just happened too quick. And it's not really. It happened to the tick. It happened really to the tick. So it happened way too quick. So I just didn't take it. So I was like, okay, unfortunate. Let's just see how it is, right? But I did not want to take trades within this range. And then for the sellers, I'm watching two scenarios: a break above 22 that fails to take the market short, targeting 42s, and 52.42, and then first target would be 5300, and 5300, and then scenario 2, a break below 42, and that then retest as resistance, and I would look to target 52.22 and then 5200. And so the reason why of this 52.42 is this is the 15% correction level, right? Market all-time highs right now was 6166.5. If we get times that by 0.85, that gives us that 15% correction level, right? That 52.42. So that's something important that I was watching. If we were able to maintain, and we were actually bouncing off it pretty nicely in the pre-market. So if we were able to get below that, I'm looking to take the market short, right? And so market open, right? A lot of, again, I was not interested in taking trades during this range. I was not looking to take anything within that range. I was only looking to see if we would get outside of it. And so right here, intraday, I was talking about one. Look at this. I was talking about how thin the level 2 is, and when it's thin, that really causes a lot of sporadic movement. It causes the market to move easier up and down since there's not much liquidity to hold it back, right? So since it's so thin, it just moves so sporadic. So that's one way to tell the volatility, right? And so I also said currently this is a range for me, updating it live, right? Not interested in anything within this range. Another thing I said is volume is a good indicator of condition we are in. You can see to the right how balanced we are. We're just building volume. There's not really any signs of excess or any signs of really trying to get out of the volume. No volume tails, no nothing, just a bunch of built volume in this range. And to me, that just shows balanced conditions. And so then right here, only scenarios if we break below the 42s and then pull back into the 42.46. Then I'd be interested in taking the market short, scaling some at 52.20 and then the rest at 52.00. And now, obviously, that's something I was looking for, right? And so, first trade, let's get straight into the trades. First trade, did take it, right? Took the market short. I actually took 3 trades this day, right? And it shows all my fills. That 42 level is that 15% correction, like I have it there. We pulled back into that level, took the market short right here, and it worked immediately in my favor. And once I saw this worked immediately in my favor, I was already up 12, 13 points. I set that immediately to break even. So my trade was break even, risk-free trade, and unfortunately I got stopped out, right? Second time, tried it again, 6 points stop loss, or this was actually even like a 5-point stop loss. stopped out again, right? That's okay. My rule is only 2 losses or max 3 good trades, right? So I have 1 break even, 1 loss. So for me, I'm willing to take 1 more good trade. As long as we're below this level right here, these 42s, even these this previous level right over here, which was the previous pivot lows. As long as we're below this, I'm interested in taking the market short, right? And so I took it one more time. Once I saw we kept seeing ups and downs, ups and downs, ups and downs, I took it one more time short, right? Targeting these, like I said earlier, those 52.20s. And then next was going to be those that pre-market low. And so that's exactly what I did. First target was at those lows, 52.25-ish, right? And then the next target was around those 52.10s, which was the pre-market lows. So perfect trade. It ended up working out after the third try, but just because my risk to reward was fine, and I felt comfortable taking those wide stops. I felt comfortable taking it because I adjusted my risk, right? I was minimized risk, I minimized my size, and I widened those stop losses, so I still had the same risk, right? For my trades, I'm usually risking around $75. So for me sizing down, and keeping those targets wider, I was still able to risk those same $75, right? So perfect trade, worked out immediately, right? Talked about it live, everything. I said took the trade one more time. I scaled off some of these lows already. This is when I'm already, as you could tell, right here it just shows I'm trading 3 contracts. This is when I was break even already, and so right here I already scaled some out at this low, and then the rest I was holding one more for those 52.10s, which is that pre-market low. Once we got below that, I was full out, and so this is just that full confirmation that I showed you, just scaling out and just adjusting to risk. So really good trade that day, trade of the week for me, and overall just really great, and so really important. So obviously getting into the weekly analysis, right? Market profile is insanely down, right? So we obviously had that kind of what I showed you, that day where we found like a couple bounces and stuff like that. But again, it wasn't anything crazy. So it wasn't until after it was on Thursday that we started to get that sell-off insane, right? So again, market, those 52.50s that I was talking about was really important. We opened up, we actually bounced off of it really nicely. I believe, did I even take a market long on that? No, I actually even took the market short on Monday, but bounced off. We held that nicely. This was ideal for buyers, but it wasn't until Thursday, once market opened, after all those Trump news about tariffs, we opened below it, and we actually even pulled back into that level. That's really important, right? Old support turning into resistance. That's just something really common for me, something that I really look at. So you could just tell immediately worked in our favor. This is when the volatility was already insane, and that was just perfect. And I actually even didn't take that trade, which is really unfortunate, which is a really good trade. But it's just so perfect, and it just worked perfectly as resistance, right? And so heading into this week, right, the weekly bullish level above is going to be 52.88. That serves as the excess point from the fixed profiles. You can see that's that A period where we have that excess. So I'm going to be above this. I believe that buyers show short-term strength to fill up that gap, right? Ideally, sellers want to keep that unfilled daily gap unfilled, not filled at all. They want to keep that gap. That really shows the strongest conditions for sellers. But above 52.88, I believe we see short-term strength from buyers in order to target those 54.28.50s, right? So that's only above. Scenario 2 is going to be if we open within, market opens around 15 minutes, right? This is for the futures. If we open up within 15 minutes within this range and we maintain within Friday's range, I expect some balanced conditions. So I'm heading into Monday. If we do open within this range, some balanced conditions, some sideways action. So for me, failed breakouts are going to be the best, right? Failed breakouts are going to be what I'm going to be looking for. Maintaining within Friday's range, we had that built-up consolidation of volume and stuff like that. Even looking at it on Friday, we did move kind of slow to the downside. It was we moved down, of course, but we just moved kind of slow, not a straight move down. So we just downtrended slowly. So again, really shows that kind of right now this could be kind of a balanced range. And then the most bearish scenario is always going to be if we open below those 5108s, and those 5108s come from that same thing, from the weekly lows, along with that kind of spike that we had down here. So below 5108, we should see some downside continuation towards possibly that 20% correction level, and that's something I wanted to speak about. It's going to be important to monitor that 20% correction level. Again, showing you guys with the calculation, 6166.5 is the highs, times that by 0.8 to take into consideration that 20% correction level. 59.33 is going to be that 20% correction level, and the 20% correction level is considered bear market. That's when we actually are considered either recession or bear market conditions. NQ has already hit it, but ES has not hit it yet. So if we do hit that, that's going to be very important. And so monitor, that's going to be a very important level to monitor. Continue to watch that. As we continue down to the downside, 5108, I really don't see any. If we maintain below 5108, I truly believe that we see that 20% correction level. True to heart, I believe that we see that 20% correction level. So be on the watch for that. And then down here, I also have 5810, which is a pivotal support for me. And the reason comes is that we have, from a long time ago, these are these pivot lows from down here. If we do get those 5810s down here, this is when I personally, and again, this is not financial advice, but this is when I personally would start to look to long some stocks in that long-term portfolio. But again, we will see how the market opens. We will see how it reacts. But hopefully you guys enjoyed that weekly analysis. Hope you guys are enjoying that. Maybe if you guys do enjoy that trade of the day, right, felt more into detail, right, rather than rushing every single trade I took this week. So it really felt better. And so again, once again, bullish above 52.88 or weekly bullish above is going to targeting that daily gap. That's when I see temporary strength from buyers, and then continuation from sellers is if we maintain below those 51.08s, targeting that 20% correction level, which is going to be the most pivotal. If you thought that 10% correction level that I showed up here, those 55.50s are important, this is going to be more important. That 20% correction level determines bear or bull market, right? It even determines, I believe, if I'm not wrong, someone correct me if I'm wrong, but determines recessionary market conditions. So obviously, good luck trading this week, guys. Volatility, size down. Keep those stop losses wider, but at the same time, keep those take profit levels wider. Make sure to stay emotionally stable, stay on track, and only trade if the conditions are viable for you. If you want to sit out, that's perfectly fine. But again, good luck, guys. Thank you guys for the support, the video, anything for the views, and yeah, peace, guys.